Everyone, welcome back to the Woz Team YouTube channel. I'm Jeffrey Woz, and today we've got to talk about the banking industry because, like you, I'm turning on the TV every day and we're seeing SVB Bank, Credit Suisse Bank, and like me, you're probably saying to yourself, what's going on? How do I keep track here? All I see is the market's going down. Are my investments safe? Is my house safe? Let's take a deep breath and talk about it, okay? First off, what is SVB Bank and what exactly happened last week? SVB Bank is Silicon Valley Bank. It's located in Silicon Valley, California. It was founded in the early 80s, and it was primarily a bank that was used to fund startups in the technology and science sectors, okay? Over the last 40 years, the bank has grown to be the 16th largest bank in the United States. So you're dealing with a substantial entity. Assets at the bank grew substantially every year. In particular, during the last 3 years. In 2019, total assets were approximately $70 billion. And 3 years later, grew to over $220 billion. During the same time, deposits, money put into the bank by customers, went from approximately $60 billion 3 years ago to over $200 billion today. As the companies were making more money, they put more money into the bank. It's that simple. What happened last week? The root of the problem starts with the money that SVB had in its reserves, okay? The money, again, deposited by the clients. SVB, in order to try to make money for itself and its shareholders, invested a substantial amount of that money into US government bonds as a way to make money on the money they had. This worked out okay in the beginning when interest rates were very low, specifically about 2-3%. But as we all know, over the last year or so, the Fed raised rates 8 times and took rates from 3% to over 6.5%. So what does that mean? Well, as we all learned in economics class in high school, as interest rates go up, bond prices go down. So SVB suffered major losses on their investments in the US government bonds. At the same time, as borrowing costs became more expensive because of the higher interest rates, many of the clients at SVB Bank had to pull out more money in order to cover the higher costs. So you had at the same time going on at SVB, major losses in their investments and money being pulled out by clients to cover higher borrowing costs. As a result, last Wednesday, SVB Bank announces they have sold a substantial portion of their investments at a major loss. In addition to that, had to issue over $2 billion worth of new stock to cover those losses. What follows? Starting Wednesday afternoon, there's the run of the bank that you hear about. Many of the clients and customers pull their money out. The bank run is on. And there's widespread fear now of other bank losses across the industry. By Thursday morning, the stock, SVB, is down 65% and takes down basically the entire banking industry with it. Last Thursday, the market suffered about a 600-point loss. Widespread fear now is going on. What other banks are affected? Friday morning, US regulators intervene, take over the bank, shut the bank down, and start worrying about now making sure that they pay back the depositors at the bank. All this happens in a span of less than 48 hours, lightning speed. I think if you look at it and you're trying to take a positive out of this, you can take it from last Sunday. Why is that? As we all know, in the United States, your bank accounts, your money that you have put aside in your bank accounts is FDIC insured up to $250,000. So that means if you have a bank account with $250,000 or less, your money is entirely protected by the full faith and credit of the United States. Problem is, what happens to the people who have more than $250,000 in their accounts? On Sunday, U.S. regulators come in and announce that all SVB customers, regardless of account size, will be fully protected and insured, and their money is safe. That's a big plus. The main reason they did this was to ensure that there's less bank runs coming up in the coming days, and to ease people's fears. If you're a stockholder in SVB, you didn't make out as well, okay? You're not protected. That's a risk that you take in capitalism, okay? But the people who have money and accounts at the bank, you're safe. So what have we seen? We've seen since last Wednesday, we've seen the stock market tanking, we've seen banking stocks get crushed, and now here we are. Today is Wednesday, March 15th, and this morning there's now a concern of Credit Suisse Bank. Okay, they're also facing liquidity issues, and it was announced this morning that their largest creditor, okay, can no longer fund them. So there's concern now about Credit Suisse tanking as well. The stock is down 65% in the last 2 days. It's trading at $1 today. $1 today. That's less than a pack of gum. So in the market right now, it's 11:15 Wednesday morning. The stock market's down 600 points. Who knows where we go from here today? So what does this mean for homeowners? I've had the calls the last few days, are housing prices going to plummet? Or are we going to, is this the end of the world? Is this, what's going on? I still maintain my position from last month. If you go back and you see our video where we did our 2023 market prediction, I said, barring a black swan event, which unfortunately we have coming right now, I still expect real estate prices to remain flat this year. I don't change that position. I maintain that position. Where are we right now with this whole banking crisis is anybody's guess. Is there going to be, like some fear, a contagion, a spread to international markets, international banks as well? Probably. What will be the severity of that? I don't know. I don't know if anyone knows right now. It is likely, in my opinion, to get a little bit worse before it gets better. But I don't expect that to negatively impact housing prices. I just don't. I'm going to leave you with a positive. Can we see this chart, Holly? Can we zone on this a second? This is a chart of U.S. median home prices over the last 70 years. Take a look here. See how that goes? Straight up. Over the last 70 years, we've had recessions, we've had the Great Recession of 2009, we've had political coups, we've had presidential assassinations, we've had any number of major crises that we've faced. Yet, over the long term, the price is always one direction of your home. It's up. I would say take a deep breath. This too shall pass. What's going to happen over the next couple days and weeks? Again, it's anybody's guess. But don't panic if you're a homeowner. Long term, you're always okay. So I hope we were able to give a little bit better analysis of where things are today, what exactly happened with SVB Bank, and where we stand with the real estate market today. If you'd like any other information, if there's anything else we can help you with, feel free to give me a call at Jeffrey Waz, Terry O'Connor Realtors, White Cloth Office, And remember, this too shall pass. Have a great day, and we'll talk to you soon. Take care.